Hello traders, welcome back to the Forex Geek, where we dive deep into the tool that can help you make smarter trading decisions. And in today's video, we are going to be talking about the Renko Bar Trading Strategy, a method that helps countless traders cut through market noise and identify clear trading opportunities. Whether you are struggling with the market noise or you are looking to enhance your current strategy, this video will equip you with the practical knowledge you can apply immediately. Now, what are Renko charts? A Renko chart represents a unique approach to price visualization that dates back to the ancient Japanese trading method. This chart consists of uniform sized blocks called bricks that form only when price move a specific amount, unlike traditional candlestick pattern that displays when price action is in time-based interval. The Renko chart creates a new brick solely based on price movement. As you can see from the screen, this is an example of what the Renko chart or the Renko brick is all about. While this chart is showing our regular Japanese candlestick pattern. Okay, the fundamental principle behind the Renko chart lies in their brick formation. Each brick has a fixed price size known as the box size. Each brick has a fixed price size, and when the price moves up by the box size amount, a green box is formed. And when price drops by a box size, a red brick is formed. This systematic approach eliminates minor price fluctuation that often distract traders from their primary trend. The beauty of the Renko chart emerges in their ability to filter out the market noise by removing time from the equation and focusing plainly or purely on price movement. You gain a clearer view of market direction. This clarity becomes particularly valuable when trading in a volatile market where traditional charts might appear clustered or confusing. Now let's show an example, because I'll change this back to Japanese candlestick and we'll look for an area. Let's change this back to the candlestick. Then we'll look for an area where price is clustered. Let's look at this. Let's go to the 1 hour. As we can look at this price action, let's look for a good area. Very good. As we can see the price action in this area, we can see price is trading to the downside and is a little bit rough at this particular area using the normal candlestick. But when we changed it to the Renko candlestick, we can see that price is showing a swift and a clear direction in price. It filters out the noise. The advantage of the Renko chart lies in their simplicity. By stripping away time-based variation, this chart helps you focus on what truly matters: the price movement and the trend direction. Now let's look at the key Renko chart trading strategy, the moving average crossover with the Renko chart offers a systematic approach to identifying high probability trade setups. This strategy combines the clarity of the Renko bricks with the trend following properties of the moving average. So we're going to turn on our moving average right now. The setup requires two exponential moving average, which are the 8-period exponential moving average, which is also called the quick signal, and the 21-period EMA for trend confirmation. When these moving averages cross over, they generate a potential trade signal, while the Renko brick confirm the price momentum. Now let's look at how we can implement the entry rules For a buy trade, if we want to buy, we need to see three specific confirmation. The first one is the EMA, the 8 EMA, which is the smaller or the slow moving EMA, must cross above the 21 EMA, which is the faster moving EMA. And we have to see two consecutive green Renko block form. When we see two consecutive bullish Renko block form, that's this green Renko block form, it signifies yes, we can enter a buy trade. And price must close above the EMA. As you can see, 1 2 price close above the EMA. This is a signal for us to enter a buy trade. So enter a buy trade when the second candle, the second block or brick has formed above the EMA. Let's not forget that risk management is very important, and we would have to put our stop loss below the lowest point of the previous two Renko bricks. The take profit should be, your first take profit should be at least 1:1.5 or 1:2.5. This should be what our take profit should be. The exit condition should always be when, first of all, how we can use to take profit. If we don't want to use the first method of 1:1.5 or 1:2, we can also use when our small moving average, which is our 8 EMA, crosses below the 21 EMA. At this region, you can see that this was a signal to leave the chart. When price crosses again after we have entered the trade, you can see that price made a crossover, cross below. It signals that we can leave the trade. To enhance your success rate, only take trades in the direction of the higher time frame trend. You can monitor the 4-hour traditional charts to confirm the overall market direction before executing your trade. Now let's look for a bullish scenario, a bearish scenario. Let's not forget the same principle goes. When you notice that the smaller moving average, which is the 8 EMA, crosses below the longer moving average, that's the 50, the 21 EMA, is a sign for a bearish trade. We also need to confirm two bearish or two red bricks forming before we enter our trade. When we confirm two bearish movements, two bearish bricks forming, we put our stop loss just above the brick, the second brick or the third brick, giving it a breathing space, and you target your 1:2 or 1:3. Then you can leave the trade the moment you see price crosses over back. The specific place you see a crossover, you can leave your trade at that. You can leave the trade or you can close your trade at that particular area. Let's not forget our position sizing. Never risk more than 1% of your trading account on any single trade. Calculate your position size based on the distance between your entry and your stop loss to maintain constant or consistent risk management. This strategy works best in a trending market and requires patience to wait for all confirmations before entering your trade. Alright traders, we have come to the end of this video. Engage with us in the comments below. We want to hear about your experiences. If you found this video helpful, do not forget to like, subscribe and turn on your notification bell so that you wouldn't miss out on more trading tips and strategies. Thank you for watching, and I will see you in the next video.